Right. Thank you everyone for joining us today. The topic of today's webinar is data-driven insights for construction executives. Quick introduction to ourselves. My name is Kevin Bright. I am a product manager with ProNovos Construction Intelligence Cloud. ProNovos, for those of you that don't know, is a platform that specializes in construction analytics. So providing you insights into your data that you might be collecting through your operations, on projects, through your employees. Before working for ProNovos, I was actually a project manager in the industry for about 7 years. I worked for a mechanical contractor down in Southern California. So a lot of experience, not only on the data side of things, but also kind of in the weeds on the day-to-day construction operations. And joining me today, we're very fortunate to have Dr. John Killingsworth. John, I'll let you give a brief introduction of yourself.
Absolutely. Thanks, Kevin. And I appreciate you inviting me to join today. And actually always a pleasure to work with ProNovos and all the group there. I teach construction finance within the construction management program at Colorado State University. My research is also related. I do quite a bit of benchmarking analysis with CFMA and other groups and consulting and so forth. But yeah, I love this movement. I'm excited about this movement towards using analytics to sort of accelerate, if you will, the transition from this massive amounts of data that we have into information that can inform insights and managerial decisions. So this stuff gets me a little excited. I guess I'm a bit of a nerd that way, but it's all good.
You took the words right out of my mouth, John. I was going to say, I love talking to you about this stuff because we can just nerd out and talk about kind of all the different cool things you can use data for to kind of improve kind of the construction industry at large, but also your own specific operation. So with that said, let's start to get into it a little bit. Doesn't look like PowerPoint wants to cooperate. Give me just 1 second. All right, let's say we try this again.
Yeah, it's all good. We're all friends here.
Right. Well, I'll tell you what, John, we don't need the PowerPoint. Let's get right into the actual data.
Yeah, let's jump in. Yeah.
Yeah. I think where we wanted to kick it off, and maybe this will be kind of a great place to start, is when we talk about data specifically for executives, what is your kind of view in terms of what executives should be looking for and using data to kind of guide how they operate as a business?
Yeah, great question, right? Like any kind of executive, and it doesn't matter the size of the company, right? Large, small, medium size, whatever medium size means, specialty contractors, right? What we need is to be equipped to make those managerial decisions. And the current process has been just very labor intensive. If we want a report that's comprehensive, like what you see here on the screen, that's going to take hours and days for your accounting department to put together, for all of this information, compile it, give it to the director or manager or CEO, whomever is needing the information. right? And then they'll do their thing and scour through it and try and decipher that. And there's probably a lot of discussion back and forth, and that's good, right? The reporting process is a good process in terms of facilitating communication and clarification, right? But
Yeah.
what gets me excited about this is the automation of it, right?
Well, and I think that's the key point there. I think when a lot of people think about analytics, their mind always goes to like fancy predictive models, AI, machine learning, and really a lot of the value of analytics is not necessarily the complex, forecasting. It's just making the data available to you in a more seamless manner. And I think that's really the benefit to it, is if you're having to do a lot of heavy lifting to look at analytics related to your operations, chances are you're not going to do it, especially if you're an executive, right? You have a million things going on any given day to day. So the idea that you're going to sit down for 4 hours in Excel and kind of crunch the numbers, it's just not going to happen. And that's why I really like, dashboards like this that we have pulled up on the screen here, where it's doing two things. One is it's calculating all the information for you. So you're not having to do that kind of manual lift of, okay, what is my trial cash balance? What is my gross profit? And the second thing is it is compiling a lot of different aspects of your organization all in one location. And I think this is a really critical point when it comes to how analytics should be leveraged for the executive. It always has to start at that kind of high level, start at that 10,000 feet. What's the overall health of the company? What are those kind of important metrics? And then from there, you can start kind of drilling down into the specific details of each.
Right. And so, and another point too is, when the president of the company or CEO, the manager needs the information, doesn't always sync with when the accountant or the controller has the time to provide, right, the report for this. And so ultimately, by facilitating and automating this process, the accountant or the controller is, sort of freed to actually focus on the accounting and focus on ensuring that the information in the system is accurate and timely and so forth. And then the reporting aspect of it is just relieved from that process, and your manager is allowed to access this stuff at any time when they need it, right? It's not like this, well, I better go ask for the monthly report or the weekly report, or however often you want to get it. It's just right there. And sometimes those managers need quick information. What is our cash position right now? I need to be able to make a decision on whether we make this investment or payment, right, or purchase this piece of equipment. I need to know where we stand, on all of these aspects. How much is in our receivables at this point? How much risk should I take on with this decision? And a dashboard like this, right, is not a one-dimensional answer, as well, right? So that's another powerful thing about this is I can consider a decision like equipment purchase and say, well, okay, where are we at in terms of our cash position? Where are we at in terms of our receivables? Where is a bottleneck? Which customers are associated with that? I might have a comfort level because I'm very sort of connected with the operations people, and I understand certain customers will take longer to pay and others, and so I can look at my I'm looking at, Kevin, that orange bar that indicates 61 and 90 days there.
Yeah.
Yeah, and looking at that, and isn't that interactive too? Are you able to click on that and see how which customers are associated with? Okay, so those are all your.
Yeah, so you can go in here, and maybe this is a good opportunity that we should start to dive into. Okay, what does some of these actual analytics look like in practice on this dashboard here?
Yeah.
So I like how you brought us right to the AR here, because that's when we kind of think about what should be included, on an executive dashboard. When you think of analytics, I always think of it. There's kind of like there's the three groups. There's the financials of your operation. There's kind of the HR element, kind of what's your head count, employee payroll, and then down at the bottom you have a section for project health. So let's kind of go through the financials a little bit at our first here. So what you can kind of see here, and these are some of the things that I think are kind of like those high value impact things that are just good to kind of look at on a day-to-day basis. And as you're talking, John, I think you really hit on something that's really important to emphasize is when you're doing analytics, it's not like it's not an appointment type thing, right? You're not like, we're going to look at our analytics every Thursday at 3 p.m. It's kind of like you look at the analytics in the course of your making decisions related to your business operations. So that's
Right.
why having these kind of immediately available is really important. So kind of just general stuff, being able to see how you're tracking your gross profit year to date. What's great about this is kind of where we talked about going from that macro to that micro view again. So I can see what my gross profit year to date is, but if I want to see how that's stacking up compared to previous years, I can click on this here and it's going to show me the data from past years. If I go down to my trial cash balance right here, that is probably one of the things that when we talk to different contractors, they care about the most. It's how much cash do I have in the bank? Am I going to be okay moving forward? And this is like a really good way where you can basically see what is my trial cash balance today and how am I doing this month? Have I taken more in this month or paid out more this month? And you can start to kind of drill into it and see the specific transactions that may have led to that change in the cash balance.
Yeah, let me just sort of add on to that if I can. I did a little research project with a group of sureties and CPAs, and this was right in the heart of COVID, that COVID stretch, and there was a lot of uncertainty in the market right now, and there was a lot of concern about, is this going to create, an economic downturn, and what's the forecast and so forth. And so I began to interview and explore, okay, what are the effective managerial strategies for managing an economic downturn, and overwhelmingly, 100% said you've got to focus on improving your cash position, working capital, right? Cash flow is king. Like one of them even, use that old cliche, cash is king, focus on your cash flow. So yeah. I think you're absolutely right that KPI on this sort of executive dashboard is so critical. We need to know what do we have right there, and then to be able to look over to your HR thing and look at the demand on that cash is also really important. So then we can start to use multiple sources of information to inform a decision, right? We never make a decision about how much cash is actually in our wallet. It's how much cash is in our wallet and what other expenses do I have coming up, right? And what are the other demands on my cash? So
yeah, and I think that goes to all this is tied together, right? So when you look at your cash balance here and see 2 million, well, exactly to that, what's that demand? So I can see, all right, my outstanding AR is 2.3. My outstanding AP is 1.7. I can get a sense of how much of that is aging 0 to 30, 31 to 60, 61 to 90. And then I love metrics like this, your day sales outstanding. How good are you actually collecting on your AR? And are you getting better at it or are you getting worse? And that's where some of the analysis starts to come into it. It's not purely, hey, what's just that raw day sales outstanding? It's looking at that trend to see how you're improving from one month to the next.
Oh yeah, trend analysis is so powerful. I mean, if you can do that with benchmarking as well, like in terms of where the rest of the industry is, and that comparative analysis, that's really powerful. But to be able to look back and say we have an improving trend, that's leverage. Honestly, that's leverage with your bank, your surety, your insurance. All of those things should be, you say, look at all these categories in which we are improving our position, and then you can lean on those guys to take on more risk in terms of your bonding capacity or your insurance capacity, that kind of thing.
Yeah, and then down below on the project health section, this is something I think marries really well with the financials, right? You always want to know at the top line, how are you performing as a business? But then, as construction companies, really what drives the bottom line is how are you performing on individual projects? And as an executive, you might not always have the chance on a day-to-day basis to dive into the weeds of every single project, and really having a way where you can identify where you might have, or which projects might be the problem child, for lack of a better word, that you might need to pay a little bit more attention to, follow up with the project manager, really see what's going on. Something like this is a really good tool. So what you have at the top here is kind of a few different metrics that you can look at across your project. So I'm looking at over under billings right now. I'm sorting from my greatest value to my least. Let's say I wanted to sort the other way and I wanted to see, hey, which projects am I underbilled on? Okay, I can see 22008. I've got $100,000 underbilling. I know I got to follow up with that project manager right away. Mm-hmm. Let's say my over under billings are looking pretty good, but I want to take a look at my profit margin. All right, I'm going to do the same thing here. I'm going to sort ascending. And now I can very quickly see which projects are kind of in trouble and have a negative profit margin. 20004. All right, something's probably going on there. Again, let me follow up with the project manager. And that is kind of how executives can really start to leverage analytics. Analytics, it's not a magic 8-ball that's always going to tell you the right or wrong answer. It is a really powerful tool to identify where you need to be spending your time and attention. So when you are, busy and you're trying to do a million things in one day, you can make sure you're focusing on the activities and the projects that are going to have the highest impact to your bottom line.
Yeah, and this doesn't calculate your mean, but you sure can. You can almost visualize what that average is without even the calculation, right? That's what's powerful about visualization tools like this, where I almost, it would be nice to have that calculated, but I almost don't need it. I can tell we're right around 26%, right, as a company.
Yeah, and the other great thing that you can do with this is you can kind of look at it in different ways. So if I only wanted to look at, hey, how are my government jobs doing? I can filter on those projects. So you can start to get a sense not only of how are you performing widely as a company, but are there certain types of projects that are more successful? Are there certain project managers that might be struggling that need some coaching? You can sort of slice and dice it different ways to really get a sense of not only how you're doing in the aggregate, but how you're doing in kind of a more granular level as well.
Yeah, I like that. The ability to drill down is really powerful.
Yeah. Well, hey, I don't want to rush off the executive dashboard. I'm super excited to talk about the next dashboard we have. But before I move to that, John, is there any kind of closing thoughts on the executive dashboard you wanted to point out?
No, I think this, yeah, let's move forward, make sure we have enough time to talk about the other dashboard too.
Okay. All right, so this other dashboard is a dashboard that helps executives look at their balance sheet, their income statement, and more importantly, calculate the financial ratios off of it. So the executive dashboard was really kind of focused on letting you know where you are today, right? It's giving you those descriptive analytics of what's been our performance to date, what's my current cash balance, what's my current outstanding AR. When we look at the financial ratio dashboard, this really gives you the opportunity to kind of say, all right, what is my data? But then also, what is that data telling me? How can I analyze it and look at it in different ways? And what's really great about this is where it becomes a real time saver, because all these ratios are going to calculate automatically for you. It's going to give you that timeline of how you're performing from one year to the next. So you're not having to spend time to sit down and do these calculations. It's going to automatically be done for you. As we're kind of starting to talk about the financial ratios here, I'm going to launch another poll. I'm just always kind of curious how much of this type of analysis contractors are doing out there on a regular basis. I guess, John, I'm kind of curious to get your impressions of how a tool like this can be used by executives and construction companies to kind of inform their operations.
Yeah, I mean, just having a financial statement alone does not always give you right context. What I teach my students is, I'll ask them, and we'll go right down to click over onto the income statement if you can't.
Yeah.
And I'll go right straight to net profit margin or net profits in terms of dollars. And I'll ask them, I said, okay, well, does $1.75 million sound like a lot in profits? Right. And, they kind of just stare at me like, how do I know? But that's the right answer. How do you know? Like, until you actually start to do a vertical analysis and do some comparison between your net profits and revenue, or between net profits and equity, net profits and total assets. How do you really actually measure your performance? And so that's why, calculating these ratios are so critical, because it helps you actually look at your progress in the context of the whole business, right? Maybe our net profits have gone up from last year. And if all we did was measure, for instance, on the screen, we can see in 2021, this mock company made $875,000. And in 2022, they made $1.7 million in net profits. Well, okay, that seems like a huge increase, but what if the revenue actually outpaced the increase of the net profits? Well, then in that case, that ratio of net profit margins would have actually gone down, right? And so $1.7 million, even though it sounds like, a lot more, double, maybe it's not. Maybe it's actually a decrease in performance. So you've got to do that vertical analysis to understand that.
And I think that's really an important point. It's when you start to kind of, especially if you're a contractor that's growing, there is such that instinct just to look at the overall raw numbers, but kind of understanding that performance and that efficiency and what those numbers are actually telling you. It's a really good way to kind of assess whether, like, okay, am I growing just to grow, but I'm not actually getting myself anywhere? Or am I growing in a sustainable way that we can actually build on and will actually net more money in the long run? And I think kind of looking at it in kind of that context, like you described, is really important. So I kind of see her up at the top here. We've got the 4 different buckets of ratios: liquidity, profitability, leverage, and managerial. Was wondering if you could kind of take us through these one by one and maybe give us 1 or 2 examples on each one.
Yeah, absolutely. Yeah. We're on liquidity ratios here. Okay. So actually click on that selection. I like the way that this is formulated, because it allows you to just choose. So go ahead and choose current ratio, right? Current ratio is calculated. And in fact, it describes it right there. You're taking the total current assets divided by the current liabilities. This is one of those principal financial ratios that everybody uses to analyze the financial health of a company. It's one indicator, of course. But pretty typical, yeah, right? It speaks to our solvency. It speaks to our ability to meet the short-term obligations. And anytime a banker is, being asked to extend a loan, they immediately are going to go take a look at this. So what I love about it, right, immediately gives you the actual ratio, and then below that, it gives you the trend. And right, we could see we had some good years and we've had some rough years. What's the low? So 1.04, right? Probably a little bit lower than a bank is comfortable with. And then all of a sudden the next year there was some really strong increase. So we must have had some cash infused into the business, and then it comes down and then gradually climbs back up, here at a 1.4. Yeah, it's maybe that's lower than industry average. I'm not sure, of course, what kind of company we're looking at here, but the trend, the upward trend over the course of the last 5 years is probably more significant than the spikes in 7 or 8 years ago.
Yeah, and I think you mentioned something too that I think is worth spending a little time on. Is I think a lot of contractors might look at these ratios and say like, okay, yeah, those are great, but maybe they're a little philosophical. They don't affect what we do on the day-to-day. But I think what you mentioned, that your bonding company, your surety, your bank, they do care about this. And if you're not watching these and they kind of start going haywire, well, that's going to start to affect your bonding capacity, and that is going to start to impact your day-to-day. So
Right.
While these ratios may not always seem like they have an impact on what you're doing day in, day out, building projects, man, they can certainly impact you down the road.
Well, absolutely. So if I look at a company if I look at this company and I'm a banker and it's 2015 and I'm looking at their liquidity here, and they want a line of credit, obviously I'm not going to make the decision solely on the current ratio, but if this is the first one I look at and it's a poor performer, right, it's going to be hard for me to take the risk on a company to extend a significant line of credit. So one, I'm going to lowball my credit limit with that company. And two, I'm going to have to charge, a little bit higher premium for that risk. And the sureties are going to look at it the same way. But right, we can't just take a single ratio alone. So let's skip over to leverage ratios actually. And let's take a look at debt to equity, which is also the first one, right? So how much debt are we carrying on this company? In this company. So right in that same year, 2015, that was the high point. So we were very low in terms of our liquidity and very high in terms of our debt. And then we had the reverse occur in 2016, which is interesting, right? So our liquidity went really high and then our debt has gone down really low. So without knowing a lot of details, I suspect there was probably a significant investment of cash into the company here.